You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music can mean only one thing. It is time once again to talk about some volatility. Yup, it's time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the Options Insider Radio Network, coming at you live here, 1 p.m. Central, 2 p.m. Eastern. You know how to find us on the old Mixlers for the live stream, MIXLR. Just type Options Insider in there. Type Volatility. You'll find us. Easy to find. Of course, all of our shows go out through that same link live. So if you like this show and you want to listen to other ones live, maybe Option Block throughout the week, Monday and Thursday, noon Central, 1 p.m. Eastern, legion of other shows live throughout the week. That's the place to get them. Of course, after the fact, on your Apple Podcast, your Google Podcast, however you listen, Spotify. We don't judge. Just make sure, however you listen, send in those questions, those comments. We do indeed love to hear from you guys. And joining me today to help me break down the just crazy world that is volatility, let's start off over there. Once again, I'm pleased to be joined once again, holding down the MIAX hot seat this week, Mr. Shelly Brown, the EVP over there at MIAX Options. Mr. Brown, welcome back to the program, sir. It has been too long.
Oh, glad to be back, Mark. Thank you for having me.
Yeah, we got some fun stuff to talk about. I'm looking forward to get into that in a little bit. And also joining us from the volatility mecca, known as Maine, we are joined by the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program. How go the crickets, sir?
Can you hear them?
I do not, so I guess you have won the war.
They're out there. You know what? They're just not. They're not the symphony that you're used to. The huge volume of noise.
You have put the fear of God into the crickets, sir, and well done for that. So, man 1, nature 0. All right, and also joining us, rounding out our panel today, going to be fun. Going to get a little bit of the retail firm perspective on what's going on out there in the volatility space, and joining us to help us get that today, our old friend, the network, hasn't really been on Vol Views, at least not in quite some time, Mr. Brian Overby, the senior options analyst over there at Ally Invest, a.k.a. the options guy, a.k.a. your beloved host of Options Playbook Radio. Mr. Overby, welcome back to a different show this time.
All right. Yeah, it's great to be here. I would love to talk volatility whenever I get the chance.
All right, then. With the gang assembled, let's dive right on into it with a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, let's get to it. Bit of a weird one out there today. It's been a weird couple of weeks in the vol space, quite frankly. This time last week, listeners, you'll recall, we were still kind of wringing our hands about what really was the impact of this massive infrastructure hit on the Saudi side. It seems like the market had shrugged it off by the time we got to Friday. And yet, all of a sudden, right in the middle of the show, the worm started to turn. We saw some vol creeping in. We thought maybe this was it. Maybe that was a bit of a delayed reaction, better late than never, to what we thought might have been a little bit higher level of vol for the marketplace. And then, of course, that came off earlier in the week. Then we're starting to come back this week as we're seeing more exacerbations in our ongoing brouhaha, shall we say, with China, most of the major indices off. They were looking a little bit upright here to start the session, but given all that up and going red now, as we're seeing the Dow is the laggard off about 0.4%, the S&P off about 0.75%, NASDAQ off well over 1%, about 1.25%. All this on renewed trade war escalations, tensions, call them what you will. This time the U.S. saying we may actually limit how Chinese companies can be listed on the U.S. exchanges, including delisting them from certain exchanges and also potentially removing them from certain funds. And this is something I've never certainly heard of. I don't think anyone else has, too, which I think the uncertainty around this is what's really spooking the marketplace. A lot of major, obviously, Chinese-oriented names and certain funds that have them as large components getting hit pretty hard right now because everyone's saying, what is this? How can we even do this? It does seem like a little bit of an interesting step. The market certainly digesting all of this. The vol products reflecting that as well. Coming into showtime now, we were at about a 16.5 in VIX cash not too long ago, and spikes was at about a 16.5 or about 17 or so. Now they're both up since. That's why I say you can't really plan for vol views too far ahead of time because that worm has a nasty habit of turning on a dime, and it is continuing to do so as we speak. VIX cash at about a 17.5. Now that puts it up nearly 4 handles from this time last week, about 3.5 handles, and spikes feeling the love up to about an 18 right now. So that puts it up over 4 handles from this time last show. So the vol products are feeling the love. VVIX, our old friend VVIX, also feeling the love right around that 100 handle again. So that puts it up about 3 points from last show. Triple digits, 100, that's certainly a level where maybe you got to start paying attention. We always say to the downside when VXX, or should be VVIX, gets into that 70 handle, got to start paying attention there because it might be poised to bounce. When it's at around triple digits, things are happening. Things are moving. Things are rocking and rolling. Certainly want to start paying attention. We also want to pay attention to what's going on out there in the retail land. So, Brian, you're a guest today. You get pride of place, sir. It's been a wild, topsy-turvy market. Maybe let's start there. What are your thoughts on how this market is, how it's priced vol throughout the week? Were you as surprised as the rest of us last week that the market kind of shrugged off those Saudi attacks? And then what do you make of what we're seeing here today? And then also related to that, if you're seeing anything interesting on the ally side of the fence in terms of maybe what people are trading out there, feel free to have at it, sir.
All right. Well, in general, I just think volatility, if anything, they're getting it wrong as far as looking at the VIX. The VVIX being up around 100 is obviously a nice high level, but the VIX in general trading around 17 today. The news has just really been throwing off the volatility just overall in all the marketplaces. And what I would actually, what we're seeing a little bit more over in the Ally Invest world is buyers of option contracts. The buyers are the winners recently with all the volatility that's been in the markets. And even over on Options Playbook Radio podcasts that we do weekly, some of the things that we've been focusing on are actually long straddles. Never really talked about long straddles in the retail space, but we've been seeing a lot of long straddles come coming in just in general. And honestly, they've been doing well over just because of the news factor and the just not having the ability to predict when news is going to hit next. And so I kind of think overall that volatility, if anything, is on the lower end of the range. Surprised to see the VIX down around 20. And other things that I thought were really interesting is around the Fed meeting. Last week, I like to watch the Fed Watch tool over at the CME, and the odds of a rate cut bounced around left and right. At one point in time, there was an 80% chance there was going to be a rate cut right before they actually were about ready to announce. It went down to a 50-50, and then all of a sudden we get the quarter-point cut. So even things like the Fed, there's so much volatility in what they're looking to do that the marketplace just overall, I think volatility is a little bit low relative to where it should be.
Well, you're certainly not alone, and I did notice that on your recent episode of OPR, as the cool kids call it, where you actually did talk about a long straddle. Now, I was listening to that thinking, wow, when's the last time Brian plugged a long straddle on his show? Now, to your credit, you did kind of add almost like a time iron butterfly to it. You had like a shorter duration strangle kind of against it. So it wasn't just naked long premium. But still, I try to remember, Brian, it's been a while since you've talked long straddles on that show, is it not?
Oh, yeah. As a matter of fact, years. It's probably been a year. But, we always try to address when different opportunities come up to approach all the different plays that are in the options playbook. So this time when you think volatility is lower than it should be, that just be looking for stocks that you might want to buy some premium in. And not necessarily just on both sides, buy the put and the call, but just in general. I think buying premium makes sense in this type of marketplace.
So if you miss it, listeners, or maybe for some reason you're not subscribed to the full network, I don't know why you would not be, but if you're not, you should definitely check out Options Playbook Radio. It comes out on Thursdays. Brian looking at his analysis of the space, giving some interesting ideas, strategies, recommendations, breakdowns. We also answer a lot of your questions. It's a fun one. I know a lot of you guys like gobbling up. You certainly have been overloading the mailbag over there of late. So keep those questions coming. And now that we're talking long straddles, Brian, I'm sure we're going to get a bunch of questions on that for the next show. Shelly, it's been a little while since you've been on. I know you got some big news in the hopper. We're going to get to that in a few seconds when we get to the futures side of the show. Hint, hint. But it's been obviously a tumultuous couple of weeks in the market. You've obviously been kind of nose to the grindstone, getting all these products launched and everything else like that. But in general, what's been coming across your desk? What's been lighting up your tape over there as you're trying to manage a vol product in these, topsy-turvy markets we're seeing these days, sir?
Well, we're still seeing staggered volume. We saw 2 weeks ago today the firm that put the 1x2 on roll their position out. There's been some little trades since then. Markets are still a little wider than we'd like them to be in spikes, but we just had our board meetings this week, and we met with all the market makers, and they're all looking forward to the future being launched, and that future will allow them to tighten up their markets, and we should be much more competitive with CBOE's product at that point.
I like it. You're teasing the audience. We'll get to that in 2 seconds. Before we get there, though, Mr. Rock Lobster joining us once again. I think it's 2 weeks in a row now. This is a bit of a near-term record for you here, sir. A lot's going on. By the way, I think I said VVIX was at about 99 or 100 before. It's actually 104. It has ticked up even more. I thought that seemed a little low. So I went and checked it to make sure, and it's actually ticked up a bit, as you might expect, given how the worm has turned today. So clearly, firmly into the triple digits level now. Mr. Rock Lobster, we're threatening an 18 across the vol space. We're way outside of the zone of the monk. Not quite the danger zone yet, but we're flirting with what zone are we in? Maybe let's start there. What zone are we in today, sir?
We are 18 gets us into zone 3. I really don't have a name for zone 3.
Yeah. Thank God I come up with the names for your zones for you. So we got zone of the monk is 1, danger zone is 4. 2 and 3 are kind of a little bit more challenging.
Right, because they're kind of like tweeners. Zone 3 is, I'm a big boy, but not big enough yet, so to speak.
Yeah, maybe zone 3 is kind of like the dark alley zone because you see it. And if you got to walk through it, you got to start paying attention. You got to have your wits about you. Things are starting to get a little bit dicey. How about that?
It is. Okay, we can call the dark alley zone because it does portend some.
Yes, something ominous is afoot.
Some uncertainty and blackness.
Yes.
But we're here. One thing I've noticed is downside skew measured just by the SPX, not against a call or anything. I don't measure it against the call, just because that's hopelessly confusing and misleading for people. You measure the call skew and the put skew is separately. At least that's what the whole SBIT and the SPX does. So this morning, that was at levels we haven't seen in like 2 weeks or 3 weeks. So this morning, even when like the market was kind of not doing anything, that stuff was jacked. A lot of downside, very expensive right now. So I think part of it is, and a huge SPX trade went up today. But I think, I think the biggest problem is the market really hasn't recovered. We're still kind of like teetering at near all-time highs, but there's no reason to make new highs. Like I said, I wrote a blog about this, like I think 2 days ago. Just a lot of weird currents, and the market has never really come in from it. Now the fact that there's this impeachment thing that goes on, that could stretch vol out for a longer time, maybe make the Chinese not so apt to negotiate, who knows. But more, let's just say, at least more midterm, like 1 week, 2 week issues that, could play out. And I think that's, then all of a sudden, I guess we're going to delist all the Chinese ADRs. So I think this is similar to the tweet, didn't he say like 2 weeks ago, where nobody's doing business in China anymore? Didn't we have one of those? I thought we had like
something like that,
cease and desist. Yeah. So, I mean, none of this makes for VIX going down. It makes for VIX going up. And I think, and we talked about this last week a little bit. We talked about this on the option block. We haven't had a lot of realized vol. Even today, the market's barely down, right? I don't even think it's down 1% the last time I looked. But VIX cash is making a move. VIX futures not doing jack. Really not responding in any real way to this move in the cash. So, until those things really start to move and people get worried, and that could be as early as Monday, right? I don't know. But as of right now, it's mostly like you say, the market is walking down the dark alley, and really, and that's kind of, I like that almost for zone 3, the dark alley zone, because you don't really know what's going to be on the other side. Are we going to go into the, are we going to get hit by a truck when we get out of the dark alley? Or you walk out onto a sunny street and everything's fine, right? Where all the vol starts getting pulled back again. And I think that's where we are. And until something really moves, that's what we got. So.
And speaking of what we got, so I have now named 3 of your 4 zones. So where's my licensing fee here for all this stuff? You're using it in your newsletter. You're going out there doing webinars with it. I've named 75% of your vol lineage there. What's my take on this?
Well, I think you get to continue to use it on your show without having to pay a royalty fee, which helps.
So generous.
It's not like your Peloton, right? I'm not going to sit and charge, like $3, $4, $5 million just to use Zone of the Monk, on your show. I think you're getting out ahead on this. So by creating the names, actually, you're getting yourself way out in front of everything.
Who was it yesterday? It was Uncle Mike who says even his clients call him that now. So these names, they have a way of getting out this and propagate throughout the universe. Speaking of Peloton, not feeling the love, off another 5% today. In fact, Endeavor, the parent company of the UFC, decided we're getting the heck out of Dodge, canceling their IPO for today. They were already looking at pricing it towards the lower end of their range, and they decided, you know what? And maybe Peloton should have thought about this too. IPOs are kind of like politics and many other things. It's all about timing. And this is a terrible time to go public. You don't want to list in the teeth of this whatever this is, delisting Chinese companies and everything else. So yeah, I think they decided discretion, the better part of valor. Maybe Peloton would have benefited from that as well. They're already shy at 25 now, 24.40, well south of that range. I think they were looking at 26 to 29 was their range for where they're going to go public, and obviously they're well below that now. But we touched on the futures. You said the futures aren't doing much. Well, I know an area where you are wrong, Mr. Rock Lobster. I know an area where the futures are soon. They are poised to be doing quite a bit. Shelly, how long have we been talking about this? How long have we been hitting on this? You've been talking about it. Simon's been on this show talking about it. John's been on talking about it. Someday in the indeterminate future, we would have an underlying for the spikes options. We would have a future that we could sink our teeth into. We could trade. How many times have our listeners written in saying, what's the deal with the future? Can I trade the future? Well, finally, after much speculation, sir, we do indeed have a date. So by all means, share it with us, sir. The floor is yours.
We've been working very hard with our partners on this at Minneapolis Grain Exchange, and we've finally done the self-certification with the CFTC, and we're good to go on November 18th, launching the future. We've been working very closely with the team testing. We're still working closely together. I'm not sure what's going to happen after this weekend. If the Bears beat the Vikings, they might have a different opinion up there in MJX, but we'll take that risk.
It is a volatile situation up there, pun intended. It depends what happens.
Exactly.
How much does it pain you personally to be to have your product headquartered trading there in Minneapolis, sir?
Well, it's far better than Green Bay. How's that?
That's true.
It doesn't pain me at all. Being brutally honest, they've been a great team to work with. They have a great operation up there. They're running on great technology using CME's Globex platform. So everyone that's connected to CME will have access to trading spike futures on MJX.
Yeah, that's a big deal. Obviously, CME has some reach. They have some wherewithal on the future side of the space. So having access to Globex out of the gate, as you said, that's really been a huge driver. A lot of people have pointed to that being one of the key reasons why the CME Bitcoin future really took off in spite of the SIBO one. SIBO didn't really have that wherewithal on the future side, and certainly not the customer base and the reach that CME did, in spite of the fact that CME had a much larger, much more beefy 5X coin contract, and yet that one took off. SIBO ended up delisting. So having the benefit of that reach early on, I think would be a good one. So just to summarize here again, you guys are partnering with the MJX, a.k.a. the Minneapolis Grain Exchange. I would be impressed, Shelly. I would be impressed if you could find an exchange in Green Bay. That would show me that you really have a deep and abiding knowledge of the capital market infrastructure here in the U.S.
Don't they trade cheese futures somewhere up there?
They probably should. If they don't, they're missing out on a great opportunity. Maybe I think the Cheese Castle, once you get over the border here into Wisconsin, I think the Cheese Castle, maybe if you get in there, you probably can sling some cheese futures over there. But yes, MJX, you guys are partnering with MJX. The launch date, November 18th. Again, CFTC still has to give their final ultimate stamp of approval there, but if all goes as expected, November 18th is the day. So all of you have written in. All of you who have emailed, all of you have asked us how many times we talked about it on the show. There you go. Your underlying is on its way. Coming in about almost, not quite, about a month and a half or so. So there you go. You've waited this long. Wait a little longer. Then you have a nice underlying to sink your teeth into over there with the spikes. Future. Speaking of futures, Mr. Rock Lobster, you kind of just touched on it over there. It's been a weird day on the VIX futures side. As you mentioned, they're kind of not doing a heck of a lot. Coming into showtime, they were still firmly in contango. It was about a point from the cash to the APPROX future and about 2 points to the cash and the no future. Obviously, that's changed a little bit as the volatility worm has turned yet again. What fun would it be if volatility just stayed constant during the show? Otherwise anybody could do this. Anybody could do this show. That's what makes it difficult. So it separates the men from the boys here. But yeah, looking at showtime now with VIX cash hovering right about an 18, and we're seeing that APPROX future at about an 18.30. The no future at a little bit shy of 19.25. So you're talking about a third of a point from the cash to the 1 month future, and a little more than a point, about close to a point and a quarter on the 2 month future. You kind of mentioned it hasn't really done a lot. Has the structure, has any surprises lurking for you therein, Mr. Rock Lobster, these days?
I think, the biggest thing this morning is that we had that cash drop this morning, there was almost $1.70 in the October contract over cash, which this part of the cycle is quite a bit. We only have 2.5 weeks to go for expiration. I think it's October 18th or something like that. So, or I think it's October 16th, but that like literally the future barely going down this morning. Like, you know, when you have the cash, okay, you have weekend effect, vol drops, very, very, very muted action out of the future. Like, nobody wants to let this future drop this October. It's like, I wish I had a good analogy for this springy October future. Just, it does not want to die. And I think ultimately, excuse me, there's no willing sellers. Nobody wants to sell the stuff. And I think part of the reason is there's been a lot of buying of like junk put protection in the SPX. Like I said, the skew is pretty high, which means I think people are trying to kind of backspread, you know, the trade deal thing. When they do that, it's hard for that future to go down and really decay what I would call like a normal decay. So I think that's at least part of the problem, or, you know, what the deal is. And, you know, here we sit on it and watch it, but that cash did get down quite a bit under the future this morning. And, you know, again, just a tweet away from another. I had some notes from clients like, that damn tweet killed my day, you know. So they'll live to fight another day, but I think it was a bit of a surprise given, you know, maybe all the action this week, but apparently, you know what? No. Volatility, the single-digit VIX president, we barely knew him. We had him around for a year, and
we got a year out of him. I don't think anyone even expected that. No one thought we would have a month. Everyone thought we would have this. Everyone thought we would have this endless tweets just sending the markets hither and yon. That's kind of what we expected. So when that 2017 hit, that was just like a bolt out of the blue. That really was an odd one here. And speaking of looking at some historical vol, the folks over at the Journal, they put out a bunch of different newsletters and things. And they've even been looking at the vol and looking at maybe a bit of a ratio of nearer dated vol. So good old VXXT, not actually an index that we talk about a lot. That's, of course, this disseminated by the CBOE as well. So that's their 9-day vol index. So kind of like the weeklies of the vol space, effectively. So obviously very near portion of that curve versus they put out a chart, which is kind of interesting, of that VXXT to VIX. VXXT, as I said, is a 9-day. VIX, obviously, that approximate 30 days, a little bit of fudge factor around that now, but approximate 30-day expectation of volatility there. So effectively what that is a ratio of 9-day over 30-day vol. And they were kind of mentioning, and their chart is interesting here. Maybe we'll have to tweet it out for you guys to see it as well. It shows some spikes, obviously, in early 2018. I wonder what could have happened then. Could have been Febocalypse, just possibly. But obviously, when this chart gets high, it's showing near-term vol, 9-day vol, much higher than the 30-day vol. So something obviously is popping off there on that very near portion of the VIX curve. I don't know if this ratio is not one I really use a lot, because I think this is something you could see obviously reflected in a lot of other things. The VIX futures are going to tell you that right away. Something's popping off. I don't know if you need to know this, but an interesting data point. I don't know, Mr. Rock Lobster, is this one that comes across your analysis at all? Do you ever look at VXXT versus VIX and the ratio therein to help intuit something going on in the vol space?
Yeah, I'm still trying to pull up the symbol. I can't even pull up the VXST symbol on the CBOE's own live vol platform.
Yeah, I think they call it VIX 9D instead. It's confusing.
Oh, really? Okay. And
I had to do the same thing. I had to go to the CBOE website to find it. And it's VIX 9D. They put it out there.
Oh, there it is.
Yeah.
Hey, you know what?
I taught you something today.
I learned something every day.
So I'm naming your vol zones. I'm teaching you tickers. What else do you need from me today, sir?
I don't know. I don't even. I'm just going to stop writing my letter and let you write it. So I think it's going to be a lot easier for me. We have noted, and that was one of the things we noticed. And also with. Clients trading vol, like you've got vol's very expensive in the back end, but we're not moving in the front end, which makes it a little bit tougher of a trade because we're not really moving anywhere, right? So it doesn't usually when the market is, I call that actually vol fatigue, when there's not a lot of short-term vol, but the market is still pricing that longer-term vol, which usually means we're waiting for something to happen. So it's not a surprise to me because I had been watching it. I just don't watch it via the VX ST because mostly I couldn't find the ticker, but now that I know what it is, I mean, I find the easiest way to do it, you just look at the SPX, look at the, 10-day options. Now you have the weeklies and just take a look at where those are trading. But you could even be lazier and use the VX now. Now all of a sudden, though, boom, that thing is skyrocketing.
Yeah, it's off to the races. I just figure if you're sitting there waiting for VXST to move on your ticker, you're going to miss whatever's going on. Oh, wait, this ratio has jumped up. Now let me look to the front portion of that futures curve, see what's going on. Brings up a good point, though, Brian, about kind of indicators, what people use. Obviously, the journal, for some reason, fixating on this 9-day versus 30-day ratio is a key indicator of what's afoot in the vol space. Obviously, there's a bunch of others. I mentioned VVIX, of course, earlier, which is the volatility of VIX. There's spikes in VIX themselves, the various volatility indices. When you're out there doing your analysis, you were talking about that long straddle earlier. Which different indicators do you use when you're out there analyzing the vol space?
Well, obviously the VIX is the most quoted index out there, so a lot of people are always asking questions about the VIX. And in the retail space, a lot of people are just befuddled by VIX options overall and what's really driving that market. But it's really nice now that the CBOE actually puts out the VIX futures. Like if you type in VIX OCT, you can actually see the futures, and it's actually quoted by the Chicago Board Option Exchange. So they will show those futures, and that allows you to kind of look at those VIX options as a retail person without a futures account and actually trade them if you would like. So as far as the research is concerned, one of the biggest things that we'll do, and like we were talking, you mentioned the Roku trade that we did last week, that paper trade in Options Playbook Radio. And one of the things is just to look at what the historical vol is doing relative to the actual vol. Like inside the Ally Invest platform, we have a weighted index, basically a VIX for stocks that shows what a 30-day vol is relative, in implied volatility relative to the historical. And it's just really odd to see, like in Roku right now, the historical is almost double what the implied is on a 30-day basis. And you're seeing that more and more so across a lot of these stocks. And hence it goes into what we talked about at the beginning, just looking at strategies that take advantage of more vol as opposed to less vol. And you just haven't, those things haven't been very popular to talk about over the last year or so.
No, you're right. They haven't. And before you mentioned the options, we're going to get into the options in 2 seconds. I'm curious, you guys obviously have a lot of very active retail accounts over there at Ally. They kind of run the broad spectrum from advanced to very basic introductory as well. Do you see a lot of overlap with them playing in the vol space? Are they trading VIX options? Maybe if they're bleeding edge, maybe they've already been adopters of spikes before the future is here. That would be impressive if they were. But what are you seeing? Is there a lot of interest from them in the vol space? And if so, what are they using to trade it?
I think, well, they've been burned a few times. Like we've had some problems with some of these ETNs or ETFs that have traded, honestly. So some of the clients were drawn to those type of products, but they have hence left them just because a lot of those were not actually following the volatility index, like they were saying. You know, the leveraged double or triple downside, double or triple upside on an index that is extremely volatile to start with. You mentioned the VVIX being up over 100, and so now you're supposed to trade some of these ETNs and trade those when you got that type of volatility just in the underlying index. So the main product and the product I probably get the most question on are the actual VIX option contracts. And I've seen people kind of go away from trading some of these ETNs and ETFs that are tracking all these volatility indexes and kind of come back to the options, honestly.
Well, I'm sure that question everyone asks is, how come the options don't trade off the cash? Shelly, see what you've done now by launching or preparing to launch a future. You've opened yourself up to a legion of those questions about the spikes cash versus the spikes future. Are you prepared for those, sir?
We are prepared for those. The products are similar enough that you'll see similar behaviors. We think they're going to trade very much alike. We just think the advantage of using SPY is what will make the difference.
Mm-hmm. Yeah, and I would agree with that. That makes a lot of sense to me.
Well, let's get into what's trading here this week and see if the folks out there agree with us. Shelly, you kind of touched on it at the top of the show there. Our 1x2 friend came back and rolled recently. That still is dominating the tape out there in terms of size. with the spikes options OI. It was, remember, listeners, he adjusted his strike, so it had previously been 2030. Obviously, he took advantage of a little bit of a sell-off in the vol space to roll his strikes down a little bit. Now he's on the 1827, 6,000 by 12,000 times, so 18,000. And that also a bit of a 1x2. Looks like he left some of it still open in October. The 2030 is still on 1,750 by 3,500 times. So he didn't take all of it off. He's kind of got 2 on, which is kind of interesting out there. So the 1x2s still lurking. I talked about this with John on the show recently, Shelly. I haven't had a chance to get your thoughts on it, though, really quickly here. It must be exciting for you guys to see this paper persist. He didn't just put it on in August and then let it go. He rolled it out to SEP and then out to OC and now out to NOV. So obviously he's liking what he's seeing out there so far, sir.
Yeah, he definitely appears to be liking what he's seeing. He's using an upstairs broker to find the other side of his trade. And I believe a lot of the same firms that are providing liquidity in the VIX options are also providing liquidity in the spikes. Certainly, he's pricing this against the VIX. If he wasn't getting similar pricing, he wouldn't be doing this. He'd stay with the other product. So there's no reason, as long as he's getting good pricing from our market makers, which he is, he'll continue to use the product. There's definitely cost advantages for him in trading spikes because our fees are so low.
Let's see what else people are using out here this week. Kind of a light volume week overall. Let's see if that has persisted. Coming into today, it was a pretty light volume week out here for VIX as well. Let's just see if the worm turning now has turned on the spigot, so to speak, out here. Not really. Only 260,000, so a little bit north of 250,000 contracts on the tape, despite the fact that we are in north of 1% sell-off in the S&P and 0.75% or so for the S&P to the downside. And let's look at the top positions here really quickly. Remember, a lot of stuff came off the board with September here, so looking at a lot of OC on the board right now. Number 10 of their top 10 in VIX land here, the OC 24 is 134,000. Number 9, the OC 40s, the ever optimistic OC 40s, 139,000 of those. Number 8, the OC 30s, 161,000. Then we go down to OC 28s. 168,000. Number 6, the OC 20s, the comparatively very reasonable OC 20s with 169,000. Number 5, our first and only put in the top 10 this week, 171,000 on the OC 15 puts. Number 4, 171,000 as well. So just a few hundred contracts separating them for the OC 26 calls. Then number 3, the OC 23s, 183,000. Numero dos here, our first and only Ds on the list. The Ds 21 calls, 209,000. Rounding out the top 10, OC 25s, 285,000 of those bad boys. Just about 7 million contracts open, about 5.3 or so on the calls, and about 1.7 million on the puts. Let's look at the action here. Let's start like we did last week. Let's go from the beginning of the week and move out because it's kind of hard to tell the volatility narrative backwards starting from today and going back to Monday. Monday was actually kind of the low point of the week from a volume perspective. Only 169,000 contracts out there, so very light day. That can easily be one trade in VIX out there, and often is. Not on Monday. Monday, the biggest trade was the 13,000 of the OC 15 puts going up right mid-market exactly. So not a lot of excitement there. Also looks like mid-market on the OC 23 calls. Both of those going up for about 13,000 contracts. So that was pretty much the lion's share of the activity on Monday. On Tuesday, interesting trades going up. Interesting trades that even got on the radar of our friend Gunjan over there on the Journal. A lot of you shared this article with us. Of course, we saw it as well here. They were writing about someone looking to draw that line to the upside there in VIX land to the tune of the OC 23s. They like talking net premium out there, so they talked about paying $4.3 million for these calls. They even quote some person I'm not familiar with. He sounds like a bit of a huckster, though, this Henry Schwartz from Trade Alert. Terrible guy from what I hear. He says, that's a big position for a volatility spike. I always feel for him when I see these articles, because that was a half-an-hour conversation. They boiled down into one little short sentence. But c'est la vie. And he likes doing that stuff. So, yeah, of course, what they're referring to, and these are the size prints that got on the Journal's radar, 90,719 of the OC 25s going up for 65 cents. Now, this was on the bid, but you got to take that with a grain of salt. This was a late print, so they were buying these. And then the OC 23s going up for 58 cents right off the offer. 75,000 of those bad boys. So actually, the 23s are the ones that were on the Journal's radar there. So that could have been legging into an OC 23-25, I suppose. There were about 2 hours separating these, but again, that latter portion is a bit late, so I put a little bit of less focus on that. Mr. Rock Lobster, do you agree with our friend, the Flow Master here, that is, quote, a big position for a big volatility spike? Pithier words have never been said, sir. I love giving a Henry a hard time.
I do appreciate the Flow Master's. I know he likes to.
He boils it down to its essence.
He does boil it down to its essence, and we actually got a little look today. Somebody bought, buying a bunch of SPX puts. So I think anyway. I think somehow people's nose got out of joint and got ahead of everything quickly. So he does have a way with words about these small prints that go up.
He does. That's his business. He is the Flow Master. They don't call him that for a reason. Or perhaps they don't call him that because I call him that. That's again, we are the dispenser of nicknames here. All right, looking at Wednesday or Tuesday was a big day then because of those big prints. 160,000 plus going up in those two prints. So 615 on the day. Wednesday, a little bit lighter, 350. The biggest print was the OCK 25s. So yeah, surprisingly quiet week out here on the vol front, given what's been going on the broad market space. Exactly mid-market again, those OCK 25s going up 25,000 times for 57.5 cents. Also kind of funky, a 1x3 put spread. Don't see those too often. It was the 1715, 3410 by 15,500 times. This thing went up. Looks like for close to even money, a few cents either direction here. Interesting. 1x3 put spread. Don't see those too often. Thursday, another light day, shy of 300,000, with the OCK 15 puts kind of doing all the paper. Over 75,000 of those OCK 15 puts going up, including big blocks of 22,500 for 45 cents both times. So all that split in the uprights there yet again. But again, total of 75,000. So of nearly 300,000 contracts that went up, over 75,000 of it was just some put love, seems like, out here on the OCK 15 strike. So, again, kind of getting to what Mr. Rocklopster was alluding to. Maybe a little bit of a fade there on the downside. We'll see. Again, those are mid-market, so got to parse those a little bit more. And then Friday, today, not much going on really here at all. It was an OCK, not even a 1x2, 1x1.5, 15-14 ratio put spread going up 48 cents by 20 cents. So doing the whole thing for actually, 1 by 1.5 times, actually, because it's 10,000 by 15,000 times. But the big print today is another late upside print. I wonder if our friend Gungeon will be calling up Henry again. This time it's the March 32 halves going up for $1 on the offer. But again, this is late, so read into that a bit of a grain of salt. But if that joshes and jives with the earlier paper we saw this week, then maybe someone, Mr. Rockops, I don't know, you getting the feel of someone's maybe looking for a little bit of upside here? Are you, again, as the Flow Master said, that's prepping for a big vol spike, I think he said.
Yeah, and I think part of the reason, too, is just nothing has gotten settled, right? So there's nothing settled. The back month vol's not coming down. Everybody kind of they don't want to sell their they don't want to sell a lot of the what I would call the stuff that makes the skew pop, right? So all of those things is, we haven't had that kind of vol relief in a couple of weeks. So I don't know. I'm still holding my long vol contracts, and I've got enough of them, so I'm happy. But I thought earlier in the week, I guess we had that little pop. It was a good reason to get rid of some of them. I didn't get rid of everything. But I'm going to sit on them now for a little bit longer because I still the balloon has not been popped any way, shape, or form yet. So, and I guess we're still waiting. That's it.
We are still waiting. What is not waiting though is VXX, aka the volatility product a lot of you guys love to hate. Brian, you were just talking about a lot of your clients over there in Ally like to play in the vol ETPs versus the direct volatility products themselves for a variety of reasons. I've heard that from other brokers too. It's not exactly surprising. It is now that, a lot of the XIVs and the funky ones have kind of come off the board. Is VXX, does that get a lot of play over there in Ally, or is that one not really on your radar?
Yeah, if there was one that would get the most quoted and most talked about, I guess it would be the VXX. The markets are probably better than most, and it's got a little bit more predictability as far as just looking at the chart and how it moves relative to the VIX index. I would just concur that, that is the one that probably gets talked about the most and traded the most relative to the VIX.
That makes sense. It does get a lot of play out there. Some days it's one of the larger volume products on the exchanges, so it gets some action. This week, getting a little bit of love again, threatening a 25 handle right now. So that puts it up, almost 2 points, actually about 2 points from last show. So all those people who were betting on all sorts of downside. By the way, we talked about it last week, the OI. The OI makes me sad whenever I look at the size OI out there, and certainly around expiration time, because there was a lot of size OI betting on a lot of extreme downside, 20 handle and below, and also some upside. I think 27 handle and above on the upside. So either way, a lot of that OI went out worthless. So we feel your pain here on the show, listeners, but that made me sad last week looking at those numbers for OI on Friday for VXX. Let's see if it's a happier equation today. Obviously, a lot more ACK on the board here this week. Let's see, top 10 out here in VXX land. Number 10 actually is December. The D18 puts, 16,000 of those. Number 9, the ACK 22 puts, 16,000 of those as well. Number 8, the ACK 40 calls. Interesting. 18,000 of those. Number 7, the ACK 46s, also call side. 20,000 of those. Number 6, the ACK 19 puts. ACK 20 puts. 23,000 of those. Number 5, the first Jan on the list, the Jan. And actually, it's a call. That's weird. Jan 22 calls. Haven't seen a lot of Jan call up. Usually Jan is the exclusive domain of long-term put buyers in VXX. Jan 22 calls, 26, almost 27,000 of those. Number 4, the Jan 14 puts. There we go, 29,500 of those. Number 3, ACK 20 half puts, 30,000 of those bad boys. Interesting. Going back to that well again, are we? Here, drawing a lot of lines on that 20 striker. So it was a bridge too far last cycle. Doesn't seem like the current state of affairs is working in your favor, but again, we shall see. Number 2, the Jan 22 puts, 34, almost 35,000 of those. Number 1 right now, actually the ACK 32 calls, 38,500 of those bad boys. So interesting little bit of schism in the OI out there. Total right now about 1.5 million, about 800, almost 900,000 on the calls, and about 600,000 on the puts. So calls leading the dance. Not a lot of big prints out here. The biggest print actually of the week came today. The no 33 calls going up for 49 cents below the bid, but those openings. So maybe someone aggressively harvesting some upside here, taking advantage of this apparent call love we're seeing out here in VXX and crushing it. But that was kind of the largest print. We have been talking for a bit. I want to make sure we get some of you guys on the show as well. So I'm going to skip over the earnings vol, and we'll get right into some of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, let's get to it. Some of your questions. First off, we got one here. Actually, it's a good thing we have you on the show today, Brian, because you can kind of give the broker perspective on this. This comes from IRL8. He or she wants to know, do brokers charge more to trade VIX and volatility products? Well, it's a lot baked into that. Obviously, VIX itself is a proprietary product, so SIBO likes to tack on some fees to that one, so that's going to get passed along to you as opposed to a regular product. I know some other brokers have gone extra steps. I'm pretty sure IB has tacked on some like exposure fees. In fact, I do believe we had a listener a few years ago who ran for Congress, and the entirety, as far as I could tell, of their platform was in trying to get IB to reduce their VIX fees. So it was interesting. Certainly it resonated with our audience. I think I told them, I'm not sure if that was a broad populist platform on which to run. I don't think he won, but still an interesting thing. Brian, what do you guys do over there at Ally when it comes to, it could be VIX, could be spikes, it could be some of these other vol ETPs. Do you have different pricing structure, or is it all kind of the same?
It is the same in general, but if an exchange does charge a fee, we pass that fee on. So it's outlined in in our documents saying that when the exchanges do trade a fee, we pass them on. It's usually the exact amount. We don't try to make money off of the additional fees. But that also happens in some index options too. The S&P 500 index is a proprietary index with the Chicago Board Option Exchange, and not even being a vol product, we'll still pass those fees on. So A way to look at it is to just go on out and see how many exchanges it's trading on. If we see any of those vol products and they're trading on 5, 6, 7 exchanges, most of the time that means there's not going to be fees that are going to be additionally charged. It's like the simplest way to do it as opposed to just like calling the broker and asking a question. But overall, no, we don't charge additional fees just because the product is more volatile. That does not happen. Might charge additional margin requirements if you're buying those type of options. In other words, a lot of those type of products are not marginable at all. You have to pay for them in full. You don't have that ability. But in the option space, we only pass the fee along if the exchange chooses to charge an additional fee above and beyond for those products.
There you go, Mr. or Mrs. IRL8. Easy for me to say. Let's try to squeeze on at least one more. Let's see. Let's go to this one. Kind of a related question here from CO54. We got weird handles today. CO54 wants to know, does this notion of having approval levels for vol ETPs, does this have legs? This is something that kind of sparked to life after the VIX apocalypse, Volmageddon, call it what you will, of 2018. Obviously, XIV went the way of the dodo, SVXY, and the others were effectively neutered. That brought up a lot of consternation, hand-wringing over whether some of these products maybe should be treated more maybe like an option. They have to have level 1, level 2, level 3 to trade options approval. Maybe you should have something similar for some of these more esoteric type of ETPs. Shelly, you're obviously knee-deep in the vol space right now. Is this an issue that's come across your radar? And if so, what do you think about this notion of, let's say, taking a VXX or a TVIX or something else, or maybe XIV back when it existed, and slapping maybe an additional layer of approval on it, just so you have some sort of inkling that people understand there's other risks attached to this product?
But we certainly, for the stability of the markets, the investors need to be educated in the products they trade. And the amount of education that's been done in the options arena over the years has been tremendous. I applaud the Options Industry Council and the CBOE for all the education they do. And it's made the business a better business. And it's really essential for the retail brokers that they know that their customers have some idea of what they're trading. Some of these highly leveraged ETPs, you talk about a derivative on a derivative. They're complicated. There's a lot of risk there, especially when you get into that leverage. And yes, I do believe the customers and any user should be educated. Anytime you create risk by taking a position, if that risk is to offset another risk and it's truly an investment, that's fine. But if you're creating risk where no risk previously existed, and especially if you don't understand the product, you're really gambling at that point. And the markets aren't for gamblers.
That is true, Mr. Rock Lobster. A lot of your mentees and clients live on the bleeding edge of the vol spectrum. They like heading down that dark alley. They look for that. So what do you think about this notion of maybe having approvals for different... He mentions vol ETPs. I've heard it for a lot of ETPs, though. What do you think of this notion of putting some approval levels on them?
I don't think that's a bad idea. Although, I even have trouble getting vol approval levels for stuff in the IRAs and stuff. It would, if they have what I would call a common sense approach to that type of thing, because ultimately you're one person, and if you're a Schwab or TD or something, they got millions of clients and they're trying to figure out a way to approve people. That's what the deal is. So, but I think, it is a good idea. They just have to have a good common sense way to do it.
Brian, I'll give you the last word on this, then we got to roll on into the crystal ball. I do believe you may have been one of the first person that raised this idea directly to me. I've since heard it from others, but I do believe we mentioned this on one of your shows shortly after, in the wake of all that madness that happened in February of 2018. There was a lot of hemming and hawing and hand-wringing about this notion. I think you were one of the first people I heard mention this notion of putting approval levels on these. So what do you think here? Are you still behind that, or maybe you think something else should happen? What's your thoughts on this kind of putting, let's say, for sake of argument, 1, 2, and 3 on these ETPs?
Okay, that's a tough one, because yes, you put the approvals on, you're putting a burden on to the brokers to have to do these approvals, and then when it really comes down to it, what you're approving somebody to be able to buy a call as opposed to do a call spread? I don't quite know. As far as the options are concerned, that sometimes the approvals don't necessarily go along with the product. So if we're looking at approvals in particular on ETPs that are trading volatility, what I was talking to you about that we mentioned to pull up a conversation is I've heard rumors that they were actually going to have like a options disclosure document that is supposed to go out, that's supposed to explain the risks before people can trade them. It's almost, in the mutual fund world, they do stuff with that, like with a prospectus and in other worlds, they do that type of things too. But now one of the things that I did hear is like the regulatory bodies coming out and grouping everything in and saying not all exchange-traded products, to shorten the word, should have some type of prospectus that goes out with them before they allow you to trade them. So I would like to see something, but I would like it to be more of almost maybe a warning before you trade them first, as opposed to actually have to send out a document that nobody ever reads, that you just are, killing trees by sending them out. I'd like to see something more electronic, something that would be on the platform that says, hey, you're about to trade this. Do you understand the risks? And then somebody has to acknowledge it. And if you don't, you have a readable document that's not going to take you, 3 days to read and review before you place the trade. And if you want more detail, you go into it. I would like to see something more like that on the forefront before somebody enters an order, as opposed to trying to teach them all in one shot by sending out some big, heavy pamphlet, i.e. the options disclosure document if you want to trade options.
Yeah, that sending out a dead tree version in the mail is not going to help you when you're hitting click on the brokerage platform. You want to get it in their face then. That's the moment they need to be reminded that, hey, there are risks. And just because it's maybe listed under the ETF/ETP section, this esoteric vol product that's 1x3 or whatever the hell it is not the same thing as a SPY. And you should probably know that. And maybe that should be delineated out there. For what it's worth, listeners, I did put this question to Hester Peirce from the SEC about a month or so ago. Check out my interview with her on the network. You can find her answer to that. But to summarize it, she didn't sound like she was too on board with the idea yet. So it doesn't sound like it has legs. But I think it's an interesting idea that, especially the way Brian described it, where something you have to actually click through to make the trade happen. Makes a lot of sense. Speaking of making sense, let's see if we make some sense. It's time to go down one of those vol dark alleys for ourselves. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, Brian, it's maybe the moment of the show where you're regretting your decision to join us because you have signed on now for the most dangerous segment of all. It is indeed the crystal ball. This is, of course, a portion of the show where we attempt, it's a difficult thing, we attempt to wrestle down these slippery pigs that are spikes and VIX, a.k.a. volatility, for another week. And coming into showtime, end of the show here, we're seeing spikes at an 1865, so feeling the froth out there. And VIX cash at about 1835. Last week, I was feeling the most love, and I was feeling vol about unched. We were around a 14 handle last week. I was feeling a little bit more. I felt about a 14 and a quarter, and that's what I came down as. Mr. Rocklops, as I recall, you were feeling a little bit of downside, down to about an oddly precise 13.59. And our guest last week, Mr. Dave Lincoln of VIX Crush infamy, he was feeling the crush. He was feeling 12.08 on spikes and VIX. Long story short, none of us guessed an 18 handle this week, listeners. So we're well outside our one point radius in which we need to be to declare a victory. So no winners this week. So that means, Brian, as our guest, you get perhaps the dubious honor of being able to go first. What we're doing, Brian, is we're trying to predict where spikes and VIX, you don't have to make one prediction, you don't have to make two, just one for both. That's fine. That'll work. Where it's going to be this time next week. So not at the close, but at the end of the show, right around 2 p.m. Central, this time next week. So what are you feeling for next week, sir?
And I'm predicting the actual VIX index, the VIX,
yes,
correct?
Yes. No 9-day, none of that stuff.
Well, I'm going to stick with my theme that I've had on the entire show, that vol should be higher as opposed to lower. And I would have been that way last week, too. But I understand where you guys were going with the fact that the Fed was going to be announcing and everything. You're thinking, well, the Fed is this one news event. And that's one of the things that I think has happened recently is we always look at these one known event and we think that that's going to be controlling volatility. But we've just had so much news just come out just all across the board. You have no idea about the news cycle. So it's all about the news on that one day. I'm going to go higher. I think the VIX should be up around 20. And now, obviously, you can just look at the historical volatility of the actual index and, say poo-poo to what I'm thinking. But I'm going to say that the VIX, let's pick a nice round number. Let's go 20 by the end of the show next week.
Wow. Feeling your oats.
I'm going up.
That seems a lot more doable than it did a week ago. You're playing the Russell Rhodes seat this week. He used to be our degenerate buyer of upside and volatility. Every week he would pick up, regardless of what was happening. Didn't work out too well for him in 2017. But let's see. Maybe this time next week we shall see. You know what, Mr. Rock Lobster? I'm feeling charitable. Even though I technically was the quote-unquote closest last week, I was still 4 handles away or so. So I will give you the next choice. Do you want to go next or do you want me to go next? Yeah, this is the portion of the show here where where he has to unmute himself. So you know what? I'm going to guess for him. And since he can't unmute himself, I'm going to give him in the in the category of much lower. I'm going to make him, let's say, 997. He's feeling his oats to the downside. All right, and last but not least, he's going to appreciate that when he finds a way to unmute himself. All right, and last but not least here, I'm looking at, I was at a 14.25 last week. Brian's feeling upside. He's feeling the 20. That's I'm not sure if I'm quite that robust. What we're having today is certainly odd, I think, to say the least, in terms of the market digesting it. So I'm going to say we're going to still be elevated, but maybe not quite as high as we are right now. I'm going to say we're going to give up about a handle. I'm going to say 1755 for spikes and for VIX. There we go. All right. That music, unfortunately, listeners, means we come to the end of an epic journey to the world of volatility views. We talked new spike futures. We talked some interesting volatility trades going up out there. We talked what people are trading on the retail side of the space. A bunch of your questions, a lot more. We all missed wildly in a crystal ball. That's what the segment's for. That's why it's fun. But before we go, like I mentioned, Rock Lobster having a hard time unmuting himself today. He has that problem with that mute button. So check him out. OptionPit.com is the place to go. Sign up for his newsletter. While you're there, you can check out those vol zones for yourself. And Mr. Shelly, you guys are all celebrating, popping the corks over there at MIAX. You got a futures launch date ahead of you. But if folks are intrigued, they want to learn more, maybe they want to check out spikes for themselves, where should they go? What should they do, sir?
Go to MIAXoptions.com/spikes.
There you go. Easy enough. MIAXoptions.com/spikes. Go there. You get the quotes. You get it's all kind of encapsulated in one space. You have the contract specs. And, of course, you get a nice little snazzy, 2-minute or so video. You can check out all the spikes in nice encapsulated form. And last but not least, Brian, maybe they want to kick the tires over there at Ally. Or maybe, just maybe, they have a question directly for you. And they want to send it for you, maybe for your OPR show. Where should they go? What should they do?
Well, yeah, first of all, definitely check out Options Playbook Radio. It gets posted every Thursday afternoon in iTunes and Stitcher. And then you can always email me any questions directly at theoptionsguy@invest.ally.com. That's theoptionsguy@invest.ally.com.
There you go. Theoptionsguy@invest.ally.com. Check out his show, of course. I'm sure most of you already have. But if you haven't, Options Playbook Radio hits the network every Thursday, answering your questions, delving into some fun options strategies over there. And on behalf of the Rock Lobster and Shelly and Brian, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. Keep them coming, and we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.